Let's just take a look at some of the news coming through. Nigeria planning to sell between 210 billion and 290 billion naira in sovereign bonds, ranging from 3 to 10 years. The new game changer could be the 7-year bond, which has never been done before. Are you optimistic about these sovereign bonds that are going to be issued?
Thank you for having me at the program. Yes, market is not surprised that this is coming. The Debt Management Office have been trying to deepen the market by introducing fresh issues into the market. At the interactive section last week, the Debt Management Office did intimate market on the bonds it's going to offer to market. So we are going to see a new 7-year issue and another 5-year issue. But the 5-year issue would have to be offered to market by bond offer slated on the 25th. We are optimistic going by the high prevailing interest rates in the market, and we view that this bond stop rate or coupon would likely come out at prevailing market prices, which will likely stop at between 14.95 to between 15%. So market is earnestly waiting for this offer.
So the DMO are also just announcing a proposal for bond switches to come through. How did the market take this news? Do you think it's going to be a positive outcome?
Prior to the announcement of the switch, market has been expecting it because all through the interactive sections market have been having with the Debt Management Office and stakeholders. Market was aware that such a policy was coming because market partly requested for it to enable it to reprice its off-the-run instruments. We have a couple of bonds that have been issued prior to now, and they are not trading in the market. And it's a good thing it's going to happen. The DMO has demonstrated over the past 4 years of its ability to repay its obligations. However, in my own opinion, I strongly do believe that the debt management offer does not typically meet market expectation, going by the fact that we have a 5.5 FGN February 2013 maturity, which is less than a year to maturity to be switched. The exposure of government to this market, to this issue, is about 400 billion plus. In my own opinion, I felt like the Debt Management Office would have offered to switch maturities of longer tenor instead of maturities that are less than a year. We strongly believe here that it's not the best offer for market because market can as well afford to stay for another 1 year, get their cash and reprice on other instruments. However, the pricing mechanism of this instrument is not yet out. We are optimistic it's going to be in favor of market. So we are waiting to see them. We are waiting to see them come up with modalities for this switch.
Okay, so Emmanuel, if you could also just touch on the overall treasury yields that have started to tick lower, and perhaps one of the reasons that we've seen this is just the increase in appetite overall for bond market, of course, assets. Given the fact that we're seeing much higher returns within this space than what we've seen in the equity market, there is a view that we might just see this a cyclical rotation occurring down the line. When do you expect this to happen?
Sorry, can you please take that again? With
regards to the treasury yields and bond yields, they're starting to tick down slightly, given the fact that we've seen a lot of appetite within this space. There is a view that we might just see a movement now out of treasuries and bonds and back into the equity market. Is this your view as well? Do you think that this is a likely scenario?
In my own opinion, especially with events in the Nigerian market, both at the capital market and the equity market and in the bond market, you would agree with me, following news and information available to market participants, that the equity market is almost like a no-go area, although the authorities there are trying to revive that market. Personally, I would continue to look at the securities market because, number one, I am being offered higher yields at good returns. So I am not going to stake my funds to a market that is skeptical to some uncertainties that we don't know. The market has been moribund for a couple of 2 to 3 years now, and we could see it even from the bond rates and treasury bills that have continued to record the decline in yields, that participants and investors have their eyes presently fixed in the Nigerian securities market. I don't see this changing even for a year to come. Yeah. I personally would always advise that people stick with a market they are more knowledgeable about, and a market that is presently offering them better returns for their funds.
Emmanuel, if we could also just quickly touch on the inflation figures for March. That is obviously going to affect bond yields as well, and then obviously expectations on the interest rate front. What is the bond market currently pricing in?
Presently, my yields in the market across the yield curve is hovering within 14.75 to mid-15. We're looking at, say, 15.48. That's the highest yield you can get in the market right now, with the expectation that inflation would ease, going by the fact that we've just cropped into the cropping season, and we are beginning to see new foodstuffs coming into the market. And with easing inflationary figures, with inflation figures of February coming out at 11.9 as against 12.6, which it was earlier on, this decline would continue to manifest in market, owing to the fact that consumers were switching income, going by partial removal of fuel subsidy. There has been some stability in that regard. And even in local market, women, from our little information gathering, continue to report that food commodities has continued to come down. But going by the fact that our CPI is basically hinged on the food basket, we expect that there will be a slight ease in inflation figures. And I think government market is factoring that in already in their pricing, and we'll see a slight decline in yields from stop rates of last month in the next bond auction and treasury bills.
Fantastic,
offer.
Emmanuel. We have to leave it there. Thank you so much for your time, though, Emmanuel Odiaka from Diamond Bank, in fact, live from Lagos from the Diamond Bank trading floor.